Good afternoon, Scott Redler, T3 Live. Welcome to today's recap. So we started off on the pressure today, a lot of pressure. The Bears definitely had, the full court going, and it was really the Bulls' ball to lose, and they still have basically full control. We talked about 130.60 to 130.80. The market opened up below that level today, and then within the first half an hour, there was a basic opening range set. The Bears made one quick move. We went down to 130.06, bounced off there really hard. Then the rest of the day, we just churned higher and filled the gap from the morning, showing that the Bears really don't have much power. So all in all, very constructive action from a bullish stance. As far as from a trader stance, today was a bit of a frustrating day. There wasn't that much action because I guess we're getting a little bit spoiled. But overall, I know for me, I got stopped out of some of my positions and I had a hard time putting them back on. So I'm a little less long than I would want to be. Plus, I was in tier 2 short, the diamonds, and tier 2 long, the VIX, which is short. But I covered into that support. So at least I made cash flow on that end. I just didn't buy that dip because I thought perhaps we could get a little bit more time to the downside. But who knows? Maybe we do. But at this point, I'm really like kind of indifferent. Midterm, long term, think a lot higher. If we can get rid of this little soft patch and Greece gets the deal out of the way. Today was, I think, a plus as far as ratifying the summit agreement. And if you're short, you better be careful because if you look here at the chart, not much of a pullback. I've talked about two uptrends, this being one of them, the one that started back in October. You have a low, higher low, higher low. Then here we go, that December 20th gap and go. We broke this descending trend line. It created that accelerated uptrend. And if you remember, okay, I talked to you guys on Thursday about this push through failure, right? Here is Wednesday Fed day, push through, came below. The high here was 132.87. So if you did get short, at 132.87 or got rid of some of your longs, it didn't feel like much, but we went down to 130.07 today. So really about 3 points in the spiders, about 25 handles or so in the SPX. And if this is the correction we're going to get, if you're a bear and you're playing for these things to go down, you better watch out. You take a closer look here. We did break below, okay, this ascending channel. But again, we came back up, closed decently well. So I do still think that, now if we continue to go sideways, we're going to go higher. So with that said, I'm really not that heavy in anything right now because I'm still trying to get more data. I did have Apple overnight. We talked about a strategy about trading through that 2-day pivot. That one actually worked for a lot of the traders. If you look here, this was the earnings gap, sideways, said to go long on Friday versus pivot of 442. Then it was a nice add above this little 2-day zone, which was about, what was this level here? I think it was 449. And then it went to 453. I'd love to see it hang out a little bit more and go sideways because then I think that we'll get a nice juicy buy through this area. And this number here is 454.45. It may not wait, could just go through tomorrow. The momentum's there. This gap didn't even get close to getting filled, but we'll see. I am long this. I still think this acts well. On a different note, Google, hung in there today. I didn't add on the down move, but went long versus 200-day. I think with a little sideways action, we might get another pivot buy above this 580. For it to then test this earnings gap, which starts at 591. I'm going to stay with that trade also for a while. Today, Netflix was a little crazy. If you look at the move that Netflix has had since the bottom here, this was a great meaty trade around 75, quick move up, consolidated, nice earnings move. Then Friday, great relative strength. A lot of us made money long there. Then today, I was looking for a cute short, and I wound up losing money. It gave you a nice little pattern if you look at the 5-minute, once it broke, up at the highs. But then really, it was definitely tough. I missed this break here just because it was strong, and I actually was long overnight, so I sold it into the open. Then I waited, and then really, I was getting very frustrated right around here. I was shorting this 125.50, shorting it, and then, we got paid a little bit, okay, but then if you try to add at 124, and why is the 124 significance? I'll show you why. Because remember, we talk about the 80-20 trade. This high here was 123.99. So typically, if it were to get below this 123.99 and close below it, that would give you that topping tail and then perhaps a little bit of a rest. but it didn't close below it. It's still showing some resilience. Yes, it's losing a little bit of momentum, but it was, if you added to it at the wrong time, you got hurt. I lost money in this trade, and we'll revisit tomorrow. We'll see what happens. Perhaps if it opens up and we see some relative weakness and it trades through, today's low, we could get some downside action. But at this point, it's hard for me to be long it, unless we go sideways for like 3 days or so or 4 days, create another nice little flag there, and then I'll think about it. But it's definitely a bit extended for me. But this has been a great vehicle for 2012, mostly long, obviously, but some cute shorts trades in there also. Early on, I got stopped out of my casino trade, LVS. There was some news out there, hit me hard. Win got hit hard. I'm not in there now. I'll revisit it earnings time. Overall, still held up pretty well. On a technical level, you look at it now, and I'm a little upset that I don't own it, because it's still flagging really nicely. After holding up, this was that little mini reversal. So all in all, constructive, not going down. Win not as strong, but what are you going to do about it? This one got stopped out also. It held the prior breakout, but Win is, look where Win is in the bottom of the range versus LVS all the way at the top. So this is showing relative weakness. Some continuation in your little guys like your Ren, your Dang. I think some of us took some profits on those also. I sold mine a bit early. I didn't really execute very well today. If you look at this Ren, I missed another big move here. Like, look at this. If this was your first wide range bar, I shouldn't, stuck around, but whatever. Dang also, if you look here, we traded a few times. This was one of the times when it broke 530. And then I think this is fine. It could continue, but for me, this was a nice trade Friday. I'm out of the way for now. The banks also, Goldman Sachs was a nice little trade on Friday, little add-on trade. Today it was a little weak, got stopped out of that. But overall, it still looks okay. With some more time, maybe we could re-enter. You look here, all in all, inside day, so it's still fine. I guess now we kind of have to change this pattern up a little bit where it's more of a, a channel type trade here. It's not really a flag where you have the high end, the low end, and with some sideways work, perhaps it could continue. Morgan Stanley was upgraded also. It really, didn't do much on that upgrade, but still hanging around. X, I just got out of it out of pure boredom. I'll wait till earnings tomorrow. We had a nice little trade, like incubating in here, and then you had to move up, and then this was definitely a little bit too big, for the bulls to really, be happy with. You should have held the mid-range here. It didn't, came back into the base. I would say it's still fine, but let's wait till tomorrow. Maybe there's an option play in there. Trying to find the bottom in the steel sector has been tough. AKS, it was decent that it reversed on earnings, but now it's actually right back into this area, but just not barn-burning trades, so it's hard to sink your teeth into it. And that's really it. I'm not going to go over every chart because everything somewhat held their upper ranges. Market's proving that it could do a lot of work over this 1300. I think mid to longer term, this market looks a lot higher. Short term, we're trying to work off the move that we've seen, since mid-December, or that December 20th gap and go to the breaking of the downtrend at the first day of the year. So with a little bit more work in this area, I would say that we're going to start heading higher, and then we'll have enough data and some new bases and flags to add new positions. But for right now, I'm going to be a little bit more of a sniper, something that's been different this year. I've been taking a big portfolio approach right now. I'm going to look for the action, hit a few singles, see what the market composure is, and then I'll start setting up the bases again for some bigger runs, so to speak. So with all that said, even gold really hung in well. Gold, you look at this area after breaking this downtrend that we've seen. You have a nice little gap up, flagging really, really tight. Not many sellers here, so the longer it goes sideways up here in this tight range, the more prone or the better the odds that it breaks higher and then tests this 170, and then who knows, even higher than that. And lastly, MCP, really quiet today also, but still hanging around, still above this downtrend that it broke. Boring people to death. Maybe in the next day or so, we will get that move above 32.20. And if you look at this read also, hanging around, big move, flagging. So sometimes you see nice continuation there. So with all that said, still a lot to do. At this point, I would be a little bit more of looking for cash flow type trades versus riding a trend. If you are a macro trader, stay the course. As far as a momentum trader, let these things rebuild again, and then we'll go after the momentum once again.
Yep.
So this is Scott Redler, T3 Live, the recap. See you at the morning call tomorrow. Have a nice night.